Welcome back to Morning Trade Live. It's time to go inside out on Apple. I mentioned that it gained over 12% last week. Obviously, we've had the administration working with Apple and not charging it some of, giving it a pass on some of the tariffs and things, particularly from India. Paul Powers, CEO of FISNA, is with us. So Apple obviously has committed another $100 billion. We've seen a lot of money being invested here in the States. What's the Apple story? Why does it run up 12% last week, and where do you think it's headed?
Great question. Last time we spoke about Apple was about a quarter ago, and I was actually pretty bearish on Apple at the time because they had just come out of an event where it was widely anticipated and hoped that they would be serious about AI, and they weren't. They were talking about displays, and I kind of forecasted at that time that Apple was going to suffer in the short term as a result, and they did. Their stock went down as a result. Since then, the narrative's changed, so Apple is getting real serious about AI. Tim Cook has said AI is a space they need to win in. They've announced that they're going to rehaul Siri and have a top of the line assistant available. It won't be till next year, but it's better than nothing. And there have been some hints that they might actually get really serious about smart glasses, which is an area that is actually a risk for Apple. If somebody else came out with better smart glasses and that physical digital interface started to replace the smartphone and Apple wasn't up and ready to catch up, that would be sort of their Achilles heel. So all of those are really positive on the tech front. And as you mentioned, meeting with Donald Trump last week, pledging to spend $100 billion over the next 4 years on American parts and American companies is obviously a very great thing for the economy. But for Apple, what's great is that Trump said they're going to get a reprieve from those tariffs, which have an impact of between $800 million and $1 billion a quarter on Apple. So avoiding those is pretty massive.
I didn't actually see what that number was. So 800 million to $1 billion by being spared on those tariffs at this point. Does the stock have upside potential? What drives Apple higher? Because out of the Mag 7, it was a name that people didn't love. And it wasn't performing in the same way as the others. Now what?
Well, the good news about Apple right now in the short term and why their stock is up is beyond that, they're also performing well. If you look at their financials, their revenue is up 10% year over year as of this quarter. Their earnings per share is beat forecast by about 10%. Most analysts have a target for Apple of between $260 to $270. And a lot of that is because of how they've been performing. But outside of the financials, yeah, there's always going to be a hiccup where one, new system isn't as great as people are hoping or whatever. But the macro picture is that Apple, if you think about Apple in the long term, not just the short term, what really matters is, are they going to win or at least keep up in the AI race? And is there going to be something that could undermine Apple completely, like smart glasses coming from, say, Google or a third party? Knowing that Apple's aware of that and that they're taking that head on and they're actually going after those two areas, especially focusing on AI and also thinking about how to integrate that into something like smart glasses and hopefully the near future, makes me feel a lot more confident about them in the long run as a company. Because if you just rely on iPhone sales, you're putting a lot of your you're putting almost all of your eggs in one basket. Yes, they make money off of Mac and everything else, but iPhone and the iPhone related services and technology is the majority of their business, if we're being honest about it. So seeing that they've got the tariffs figured out and they've got the future figured out makes me a lot more confident about them. And it's why I would say that I'm pretty bullish on Apple at the moment.
So also, as you talked about the enhanced Siri developments, that's coming. And it has been reported, at least by Bloomberg, that there's a new feature where users will be enabled to control their apps using solely their voice. And that could be very exciting. I mean, Apple really needs to step it up in the AI race. And how well will the 17 do? That's another thing. People want to be part of the Apple ecosystem. Do we have some sort of super cycle coming at all?
There's a lot of rumors going around about the 17 right now. One of the things that we're hearing is that it's going to be more open for developers to be involved and for AI to be a little bit more customizable and usable on the on 17 and beyond, also in the new operating systems that are coming. The point about controlling apps is a big one. Traditional software and including on the phone, your traditional app usage, you have to open up the app, tell it what you want to do. It's input for output. Whereas what you see with ChatGPT now is you have one very simple chat interface, and you can speak to it, and it can handle things that might have been handled traditionally from multiple apps at the same time, and it can do it all in one space. It's not frustrating to remember which app do I use for what. And I think that Apple's catching on to that and realizing, hey, if we want these apps, which we get a ton of money from, to matter in the future, and for ChatGPT to not pose a major risk to the software end of our business, we're going to need to have something similar where you can get multiple types of results, multiple types of information from across your apps without having to necessarily go into one at a time. And that's, I think, the right way of looking at AI. So if they keep that in mind, they figure out how to incorporate some of those modern expectations around AI and into their app design, into how they release Siri, that's a big win. And the second part is that they can understand the importance of that physical digital relationship, because I do think that in the very near future, we're going to start seeing more and more momentum on the smart glasses side of things. I know people have been saying that for years. It's taken a lot longer than anyone expected, myself included, but we're starting to see the right pieces fall into place. And if Apple is playing in that game and they're considering how to utilize AI in that space, they're going to be very, very well positioned for the future. And if they don't, there's a major risk factor for them, which is if those take off and someone finds that right combination of technology and usability and long battery life, and they can keep smart glasses lightweight enough, you might see a lot of people shifting away from smartphones, especially because with smart glasses, you would have to have that interface where the apps can be integrated with just your voice, right? So that combination of things is, I think, how you spell success for Apple in the long run. And I'm happy to say that at this moment in history, it kind of looks like that's what they're thinking. The future will tell. We're not. I can't be 100% sure.
Look, they have to make sure that these, it's like app intense, using your voice to drive these apps, but they said they have to make sure that this feature is really foolproof and accurate and be able to handle some high-level things. For example, high-level stakes scenarios such as healthcare, financials, banking apps. People are going to be, obviously have a lot on this, so that they said they plan to launch this and heavily market it in the spring. So we have something to look forward to next spring. How many people still want an Apple phone versus all the competition? I mean, when I walk around New York City, I do see people with other phones. Not everybody has an iPhone.
Well, the iPhone's still performing well, but it's really in the US. If you go to Europe or you go abroad, you're going to see a lot more Android and very, very, very few Apple, very few iPhones. So that's another thing that Apple has to figure out is how do they expand beyond the US market? They've got 13% growth in iPhone sales right now this quarter. So they're doing well on iPhone sales. This is more, what I'm suggesting is more of a long-term concern. That a lot of things I hear from Android users. I'm an Apple user myself. I use iPhone, but my friends who use Androids always tell me, well, it's funny that Apple just released that because we had that for the past 3 years in Android. And I hear that about almost every release that comes out from Apple. So Apple needs to be ahead of the game, not behind the game, not behind the curve. They're relying a lot right now on brand image and perceived quality and the interoperability of their systems. But that's a dangerous background to rely upon in the long run. You have to make sure that your innovation's not just playing the game of catch up, which it's largely been doing for the past, I would argue, at least 5 years versus Android phones. So for Apple to catch up, they need to be thinking about that next step. And in order to do that, you need to make sure that your AI is it can't be playing catch up in the game of AI against Google, because if Android is even a month ahead of iOS, that's a big deal today. It'll be a massive deal in a year. And a week will be an even bigger deal than a month was in 2 years, just because of how AI accelerates and how it grows. So you can't be playing catch up, and Apple needs to realize they can't just be on par. They have to actually be ahead if they want to win this race.
Oh, yeah. I mean, he said, I saw Dan Ives from Wedbush. I see him here often, but on Friday he said actually that there's an F1, Apple's in the F1 race, meaning like there's like such a fast AI arms race going on, and Tim Cook is on a bench sipping lemonade. And that this could be a BlackBerry moment. So as you're noting, they better step it up and definitely get in this game. Paul Powers, CEO of FISNA, thank you so much. It's great to see you. Appreciate it. You know, are they on a park bench sipping lemonade? Tom White is with us. He's going to take a look here at some example trades, and depending on how you're feeling, if you're a big believer that Apple is in fact doing the right moves, maybe you want a bullish example trade. Let's see. You have a few for us. Good morning, Tom White.
Hey, Nicole. Yeah, I looked at a couple different scenarios here. Implied volatility levels pretty low in the bottom 1/5 of what we've seen over the last 52 weeks. So the first strategy I'm going to take a look at takes advantage of that low implied volatility in here. So went out to the September monthly cycle. So giving myself about 39 days to expiration, giving myself some duration after that parabolic move of 13% gains that we saw last week. Going out to the September monthly cycle, I'm going to buy the at-the-money 225 strike call. It's got the higher delta. It reacts more like the stock, and it's bullish, right? But then against it, because maybe the stock goes higher, but maybe it gets capped out after a while, and I want to reduce some of the risk that I'm paying on the 225 strike call. So it sold the 240 strike call. So a bullish $15 wide call vertical to the upside. You're going to pay roughly about a $6 debit for it. That's going to be a risk, $600 per spread. That can expand to $15 if it goes above 240. Now, if I pay a $6 debit, it takes my break even to 231 over the next basically month and a week or month and 2 weeks or so. That's only about 2.5%, 3% above the current share price in there. So you don't need a massive move to the upside to get above that break even, right? And then even to 240, that's only about 6.5%, 7% move to the upside. So it's not like you're looking for another 20% gain or 13% gain over the next week or the next 39 days. You just need a continued grind higher on this one. And that low implied volatility levels means I'm going to pay a little bit less for this. Now, if you want to just buy the call outright, you're going to pay a bigger debit. Your break even's going to go up to the upside. So that's why I was kind of like, you look at this a little bit more conservative, where I can offset some of my costs on that long 225 call by selling the 240 call against it for this call vertical.
And so at this point now, that's for the folks who are feeling more bullish. And you did hear Paul Powers noting some of the price targets that were 260, 270. And at the same time, you have Dan Ives, who's bullish on all these Mag 7 names, but he is concerned about Apple at this point. And so a neutral example trade, too, you have.
Yeah, I think after that monster rally that we saw last week, where it went to basically 5-month highs, I think there's a lot of investors out there scratching their head and saying, man, I wish I would have bought this at a lower price to take advantage of maybe some more upside. So this strategy takes advantage of that, where it's a little bit more conservative, but you've got to have a lot of capital in this one, because below the strike, you've got a lot of risk on it where you'd have to purchase the shares. So looked at a cash secured put here in Apple. I went out to the September 5th weekly options. Now, that's only about 25 days to expiration on this position. September 5th, I'm looking at selling the 220 strike put. You're going to collect a credit of roughly around $3.50. That's what you can make on this trade. $350 per put that you sell if it remains above the 220 strike at expiration. But because I collected a $350 credit, it takes my break even down to $216.50 over the next 3.5 weeks. That's about 4% below the current share price. So this is a twofold type of strategy where, hey, I either want to sell this put to keep that $350 credit. I've got a better probability of success because this is out of the money to the downside, the 220 put. It's about $5 below the current share price. Or I'm willing to buy the stock if it does fall below 220, and the price that I'm going to buy it is all the way down at $216.50. So cash secured put on this little pullback that we're seeing today might be the way to look at it, is if you feel like you've missed this stock. Now, you can look at it this way too. Say you put a $216.50 bid in for the stock, you might not ever get filled on that. With this type of strategy, if it doesn't go below that 220 strike, I just get to keep the $350 credit. So at least I'm profiting from that. But if it does fall below 220, I'd have to buy the shares if I stay short those puts at that break even of $216.50, which is 4% lower.
Okay. Tom White, thank you so much. Good to see you. A good look there at Apple today.